Right. Good morning, everybody. Good morning, everybody. Happy Thursday to all you magnificent melon heads of the world. Today is March 7th, 2024, and the top story this morning is once again New York Community Bank. If you guys weren't paying attention yesterday, wow, what a move that bank made yesterday. At one point, the stock was down 42% before being halted. That was right around lunchtime yesterday afternoon. A story broke in the Wall Street Journal that the bank was shopping around looking for a cap raise, trying to bring some money in somehow. It turns out there was some deposit flight happening at that bank. Not surprising considering some of the terrible headlines surrounding commercial real estate, office space, but most importantly, those rent-controlled multifamily residential buildings in New York City that, of course, are just hotbeds of corruption and theft and greed and all the horrible things that come along with it. So that stock was being just absolutely crushed yesterday. It looked like the bank had hours to live. And then all of a sudden, the stock just pops and rockets right back up to where it was. Ended up closing the day up significantly on news that they were able to raise $1 billion from some interesting places, including guys like former Secretary Treasury Steven Mnuchin under Donald Trump, former Office of the Controller of the Currency, or former Controller of the Currency, Joseph Otting, also under Donald Trump. Also getting in on the action, Ken Griffin, Citadel. Kind of weird to see a whole bunch of Republicans riding to the rescue to save a bank that specializes in rent-controlled housing in New York City. Not exactly their home turf. So that's a little interesting. Might be digging into that a little bit more in the days ahead. I'm not really sure what's going on there, but that $1 billion was enough to at least stop the bleeding momentarily because shares in New York Community Bank just started ripping higher on that news. Now they're kind of not really making big moves one way or another this morning, but it turns out that the deposits were fleeing New York Community Bank at an alarming rate. They lost several $1 billion worth of deposits in just the last week. And, well, we'll see. Is this $1 billion cash infusion going to be enough to save the bank? It depends. Our headlines about this $1 billion in cash, is that enough to make that guy with the itchy trigger finger who wanted to go pull his money out of the bank? Well, they just got $1 billion from Steve Mnuchin and company. Maybe I'll leave my money in that bank. If they're able to pull that off, New York Community Bank will live. If it's not enough, if the uninsured depositors in particular say, you know what, they got the $1 billion, but I'm still not so sure things are going well over there, and they start pulling their money anyway, then that $1 billion won't be enough to save the bank, and they won't last. This is all a psychological game now. It's about stopping that stampede of depositors, and only time will tell if it's going to be enough to save New York Community Bank. Also going on yesterday, we got the JOLTS report, job openings and labor turnover survey. That is the number of job postings in America, and it was down again, down by 26,000 to just 8.863 million. Now, that number has been falling sharply for the better part of a year and a half, but it's still well above the pre-pandemic high. I've done videos about this in the past. I think JOLTS is now, the data point has been forever skewed upward because of work from home and the same job being posted in multiple cities. But the important thing isn't so much the absolute number with JOLTS, it's the direction that it's trending in, because that continues to fall. Fewer job openings, even if the number is being skewed higher by multiple postings, if it's trending down, that means that job creation is slowing, that there's less job opportunities. Also noteworthy within the JOLTS report, shout out to my moderator, Mish, who caught this one hiding in the data. They revised January's JOLTS report lower by 137,000 openings. So a big step change down to that prior reading from January. We also got the job quits number, the number of people leaving their job voluntarily. That was down by 54,000. Now, job quits is already back below pre-pandemic levels. And that's a pretty good indicator that there's a lot of tightness in this labor market. When you see people not quitting their job, that means people are thinking, well, I probably won't be able to find another one if I leave my current job, and so I'm going to stay. And the number of people quitting their job has been falling rapidly for quite a while now, down again by 54,000 yesterday to just 3.385 million. We also got a whole bunch of retailers reporting their earnings this morning. Most of them were bad, some not so bad. Victoria's Secret reported their same-store sales were down 6% year over year. Also, they guided for mid-single-digit decreases in sales for this year. So Victoria's Secret shares are getting crushed ahead of the opening bell. We got high-end retailer Hugo Boss, maker of men's suits. Their shares are down big right now. They said that they're going to have trouble meeting their 2025 sales targets, even though there was a lot of wishy-washy, optimistic language used in that release. Hugo Boss shares are also under pressure this morning. American Eagle, their stock is up significantly this morning because they reported a halfway decent quarter, low single-digit increases in sales, but they also took a monster hit because of their logistics business. Now, during 2021, American Eagle decided they wanted to get into logistics for some reason, mainly because everybody was having a hard time getting inventory, right? Remember the logjam at U.S. ports? You couldn't get anything on a truck. Everybody was spending their stimmy cash left and right. And American Eagle says, well, you know what? We sell clothing. We could run a trucking company, right? No problem. It's practically the same thing. No, it's not. And lo and behold, a few years later, that logistics business is not doing so well. So American Eagle took a $94 million impairment charge due to losses in that logistics business. Although that stock is doing really well this morning, up double digits on news of the good quarter. We had another ship attack in the Red Sea. It was actually in the Gulf of Aden yesterday. The Houthis fired a missile at another boat. Unfortunately, we actually had 3 fatalities on this ship. I believe it was 1 Vietnamese and 2 Filipino crew members were killed when a missile hit this boat. This amazingly is the first fatalities among civilian seafarers since this whole mess started last October. It's really been a miracle that we've managed to go this far. But lobbing missiles at merchant mariners, dead sailors. This is, I don't know if I want to say an escalation because they're doing what they've always done, shooting missiles at civilian ships. But now they're actually killing people, innocent people. All they're doing is sailing cargo through the ocean. And next thing you know, a missile hits their boat and they're dead. Operation Prosperity Guardian, whether it was ill-conceived or not, is not having the desired effect on target. Our ships, our Navy ships, cannot be everywhere all at once at the same time. The Navy has done a fantastic job defending itself and defending civilian ships. However, it's a whack-a-mole approach. And, you know, there's only so many destroyers. There's only so many of these ships and planes. They can't be there protecting every single boat. And, well, things in the Red Sea are not getting better, guys. They're just not getting better. I mean, I don't know if they're necessarily getting worse, but we have definitely not restored freedom of navigation. Sailors are dying trying to cross this water. And also we had a Google AI engineer, a Chinese national, was arrested yesterday for stealing trade secrets from Google. And I don't know if you've seen Google's AI work, if you've seen Gemini. I'm not really sure why Chinese spies are trying so hard to steal AI from Google. We mustn't let the Chinese military get their hands on the ethnically ambiguous historical figures that are being produced by Gemini's JPEG generator, right? You know, the black female Vikings. Can't let the Chinese get their hands on that technology. Who knows what they could do with that, right? So that one was in the news yesterday also. Plenty going on in the world today. The big question, though, what is going to happen at New York Community Bank? We just don't know yet. Only time will tell. But why don't we shrink my big melon of a head and let's see what's going on in markets. While we're doing that, don't forget that like button, guys. It really helps with the YouTube algorithm. And if you're new here, hit that subscribe button because we do this every morning. Come and have your coffee with the melon heads as we go through markets. The S&P is up 23 points ahead of the opening bell, about 0.5% higher. The Dow is up 118, about 1/3% higher this morning ahead of the open. And the NASDAQ is leading the way higher, up 107 points, 0.6% higher ahead of the opening bell. Why are stocks up? Why? Well, because the market is open. And that's what stocks do. They go up, right? That's all they ever do. The Dixie, meanwhile, is down about 7 basis points this morning. We've got this ever slightly weaker dollar. It's been going on for quite a few weeks here. No big plunges, but just ticking down a little bit. 103.30 for the U.S. dollar this morning. And then looking over at bonds, we got a little bit of green on the short end of the yield curve and a little bit of red on the long end. So we've got more inversion in the yield curve this morning. The 30-year Treasury yielding 4.22. That's down about 2 basis points. The 10-year Treasury yielding 4.081, down 2.5 points. The 10-year was as high as 4.3 a couple of weeks ago, heading right back to that 4 handle now. We'll see if we get any resistance there. But, these rates have been ticking lower for the last couple of weeks pretty steadily. No big moves, but slow and steady, heading lower. The 2-year, 4.530. That's down 3 basis points this morning. And the 1 month is at 5.375, down about 1 basis point, essentially unchanged from yesterday. Looking over at commodities, gold is still continuing its run, up a couple of bucks this morning. April gold futures, 2,161. New record for gold, up $3.45 or 0.17% higher. Gold is not supposed to be making all-time highs at the same time stocks are making all-time highs. One of these two things has got to give here, guys. When you see safe haven assets rallying alongside risk assets, something is wrong in markets, and, well, they're both rallying to all-time highs. Silver, May silver futures at 24.45. That's actually down a couple of cents this morning, or 0.16%, but silver still had a good couple of days. We've got platinum is up 1% this morning. Palladium is down 1%. And West Texas Intermediate April futures at 78.69. That's down about 44 cents, or about 0.5% lower for oil. Bitcoin this morning, it is up again at 67,158, slowing down a little bit. This monster rally Bitcoin has had since the ETFs were unveiled. We had those 2 big monster moves up and then right back down when Coinbase took away the sell button. Or was that when No, I'm sorry. That was just that big monster sell-off from the all-time highs a couple of days ago. Regardless, we've had a lot of ETF inflows. That's continuing this morning. Bitcoin is grinding higher, $67,099 as of the making of this stream, just off of its all-time high, around $69,000. Now let's talk about this one in Barron's this morning. New York Community Bank stock climbs after a $1 billion Lifeline. This one just hit the tape a few hours ago. A $1 billion infusion from investors greatly increases New York Community Bank Corp's odds of surviving, even if existing shareholders will see their investment diluted. They are going to dilute the heck out of New York Community Bank shareholders here. After a 45% drop in its stock on Wednesday and a trading halt, the stumbling NYCB announced it was getting an equity injection from the investment firm run by former Treasury Secretary Steven Mnuchin, along with other funds. The bank will also get a new chief executive officer, Joseph Otting, previously a controller of the currency and head of One West Bank. Now, with NYCB under pressure to boost reserves on its loans to rent-regulated apartments in New York City, it will sell common and preferred stock plus warrants to the investment firms. Mnuchin's Liberty Strategic Capital will invest $450 million. Hudson Bay Capital, led by Alan Pawalski, will put in $250 million. Reverence Capital, led by Milton Berlinski, will invest $200 million. And the rest of the $1.05 billion total will come from institutions that includes Ken Griffin's Citadel Securities. The deal is expected to close on March 11th. Couple of noteworthy things in here, guys. Joseph Otting, Steve Mnuchin, Ken Griffin's Citadel. These are all powerful Republican players that are coming in to bail out New York Community Bank. I found that to be quite interesting. Also noteworthy is that the deal is expected to close by March 11th. That date is significant because that is the day that the bank term funding program expires. Now, I don't know if that is just a coincidence or if New York Community Bank maybe borrowed heavily from the bank term funding program last year on day one, in which case that loan would be due and would have to be paid back on March 11th. Regardless, that date did kind of stick out at me a little bit. Right as the BTFP expires, they're trying to close this $1 billion financing deal. Now, New York Community Bank, this one was in Yahoo Finance this morning. This just goes to show you how bad things were getting at New York Community Bank. They lost 7% of their deposits in 1 month, highlighting challenges of the new rescue. So in the month since they reported those terrible earnings and that $500 million in loan loss provisions, also when they were like, oh, by the way, we haven't had a chief risk officer since December. We haven't had a chief auditing executive since December. Oops. Oh, by the way, we have material weaknesses in our risk controls. Well, maybe that's because you don't have a risk officer. Just throwing that out there. So they have lost 7% of their deposits since that started. New York Community Bank lost 7% of deposits in 1 month, highlighting the challenges facing a new investor group led by Steve Mnuchin as it outlined its turnaround strategy on Thursday. The bank disclosed in an investor presentation that its total deposits had dropped to $77.2 billion as of March 5th, compared with $83 billion that it had on hand on February 5th. So in a month, these guys lose almost $6 billion worth of deposits in a month. Roughly 80% of its deposits are currently backstopped by insurance from the FDIC, while 20% are uninsured. Now, that 20% of uninsured deposits, that's the big risk at New York Community Bank, because that's money that the second they get a smell of danger, it's a flight risk. Those uninsured deposits, the FDIC will not come to their rescue and save them. So those people don't sit around and wait for the bank to fail. They're the ones who are probably yanking their money right now. Now, it had lost $7.8 billion of uninsured deposits over the last month. So that just goes to show you how bad things were at New York Community Bank. $7.8 billion fled that bank. They needed the money to make those depositors whole as they leave. So now here comes Steve Mnuchin and his buddies. They come in and they're like, here's $1 billion, NYCB. By the way, we now own 40% of your bank. Dilute your existing shareholders. Will that $1 billion be enough to convince the rest of those uninsured depositors to not take their money out of New York Community Bank? That is the big question. If it's not enough and that deposit flight continues, then that $1 billion from Mnuchin and co., that's not going to last long enough, and the bank is going to fail anyway. Or maybe they would have to inject even more capital. But at the rate they were burning through money, $7.8 billion in a month, they need to bring that to a screeching halt. Otherwise, this bank is still in trouble. So this is the first they've actually talked about any of the numbers, any of the actual deposit flight. We've heard about the material weakness. We heard about the loss provisions and the rent-controlled buildings, but there was no article saying anything about what was the deposit base doing? What were the uninsured depositors doing? Now that we've had the news about the $1 billion cash infusion, now we find out just how bad that deposit flight really was. $7.8 billion in a month. So if this story is not enough to reinsure those customers, then that $1 billion is just going to evaporate just as quickly as it came in. Now, this morning, it looks like New York Community Bank, they have stopped the bleeding at least. The stock is trading at $3.49. Now, that's up about 3 cents ahead of the opening bell, basically trading flat. New York Community Bank, you can see this big move. Now, this chart, these are massive swings in the stock that we saw yesterday. It was down 45% at one point, and then, it was halted for most of the afternoon. Then that announcement of the $1 billion cash infusion came in, and the stock ripped higher to $4.18. It would give up a lot of those gains. Ended up closing the day up 7.5%. But the story is not over at New York Community Bank. I think we're probably still going to be hearing more about this. And I can't help but notice the political affiliations of all the people coming in to rescue this bank. That kind of stuck out at me a little bit. So I think we'll be hearing more about this one before this story is over. Shifting gears a little bit to the JOLTS report, United States job openings. The number of job openings in the U.S. went down 26,000 from the previous month to 8.863 million in January. That's the lowest in 3 months and below the market consensus of 8.9 million. During the month, job openings decreased in retail trade by 170,000, transportation, warehousing and utilities down 68,000, durable goods manufacturing down 48,000, construction down 21,000. That's interesting because construction has been a big gainer for the last year or so since the Inflation Reduction Act was passed. Private education services down 41,000, government down 105,000. We've actually had stories of teachers getting laid off. That's a new one for the U.S. recently. A lot of kids' enrollment is dropping in schools, and schools are losing funding because they have fewer students. On the other hand, job openings increased in non-durable goods manufacturing by 82,000, and there were some regional disparities as well we're not going to get into. But you can see here, this is the job openings chart. You can see since January of last year, they have been falling pretty consistently. We had a little bit of a bounce. Now, if you zoom out on, say, a 5-year chart, you can see here's pre-pandemic in 2019, where we were at about 7 million and change job openings pretty consistently. Then 2020 comes around, makes a mess out of everything. Work from home becomes a thing. Job openings explode higher as the same job gets posted in every city. We went as high as 12.2 million job openings in the U.S. in March of 22, right around the time they started hiking interest rates, started quantitative tightening. And ever since then, the number of openings has been shrinking rapidly. but still well above the pre-pandemic level. Again, I don't think there are more job openings than there was pre-pandemic. I just think the same job is being posted in multiple cities. We got the same thing going on in job quits. The number of people quitting jobs in the United States declined by 54,000 from the previous month to 3.385 million in January. That's down from December's revised figure of 3.439 million and touching the lowest level since January of 2021. The incidence of quitting decreased in real estate, rental, and leasing, but increased in information. The quits rate is a metric that measures voluntary job leavers as a proportion of total employment. It declined to 2.1% in January, reaching its lowest level since August of 2020. Now, this one, you can see here again, big declines in quits. It's been happening pretty steadily over the last year. If we zoom out to a 5-year chart, now you can see the effect of the pandemic is completely gone from the quits rate in the United States. Pre-pandemic, we were at about 3.5 million people a month quitting their job. That number dropped substantially. The pandemic made a mess. And then work from home becomes a thing. Easy money starts flowing. Payroll protection loans come out. The Fed goes burr. Interest rates go to zero. Everybody starts hiring. And so people start quitting their jobs left and right to get better jobs with higher pay elsewhere. That number peaks in March of 2022, right as the Fed starts taking away the easy money. And we've been falling ever since as it becomes harder and harder to find a new job once you quit. And now here we are below 3.4 million, actually lower than the rate pre-pandemic. And this chart, I think, is more reflective of the tightness in the labor market, or should I say an emerging looseness in the labor market. The labor market is nowhere near as tight as they're telling us. That's why people are not quitting their jobs in droves anymore, because they know they're not going to be able to find another one if they leave. So this one is not as affected by the work from home trend as maybe the JOLTS report was. Now let's get into some of these retailers here. We're going to breeze through these this morning pretty quick. Victoria's Secret shares plummet on weaker sales forecast amid subdued apparel demand. The outlook was appropriately conservative in the near term, the CEO says. And if there's two things I never want to hear the CEO of Victoria's Secret say, it's conservative and appropriate, but that's beside the point. Let's see. Shares of Victoria's Secret plummeted after hours on Wednesday after the intimate wear maker forecast full-year sales that were below expectations, saying it was staying conservative in the near term amid a drop in demand in North America. Demand for clothing more broadly has suffered under 2 years of inflation as shoppers prioritize groceries and essential household items. Again, there's your quality of life, guys. There's no money left in the budget for naughty time because we're too busy just trying to eat and keep a roof over our head. But again, it's the best economy ever. Don't worry. The company reported fourth quarter net income of $181 million or $2.29 a share. That's compared with $173 million or $2.10 a share in the prior year. Revenue rose 3% to $2.08 billion. That's kind of right in line with inflation. While same-store sales fell 6%. Now, that's a big one there. Same-store sales falling 6%. You can subtract another 3% from that because of the rate of inflation. So you actually got real adjusted sales down 9% for Victoria's Secret. For the first quarter, the company said it expects sales to decrease another mid-single digits from a previous year. Victoria's Secret shares are getting crushed ahead of the opening bell this morning, currently down 26.6%. We've also got luxury apparel brand Hugo Boss. They plunged 18% on pessimistic sales outlook in its worst day since 2016. Shares of Hugo Boss plunged 18% before paring losses slightly on Thursday after warning that it may fail to meet its 2025 sales target amid weakening consumer demand. The German high-end fashion brand was on course for its worst trading day since 2016 after it said it expected sales to grow more slowly in the coming year despite reaching 4.2 billion euros in 2023. That's an increase of 18% on the previous year. So Hugo Boss shares, they are down 11.8% at the moment, just off of its lows for the day. But another apparel maker not doing so well. American Eagle, on the other hand, reporting a mixed bag. It was a pretty good quarter, but a big hit from their logistics business. American Eagle unveils strategy to grow profits, takes $94 million in impairment charges for their logistics business. American Eagle on Thursday announced a new strategy to boost profitable growth over the next 3 years, as the retailer said it wrote off $94 million in impairment charges related to its internal logistics business, Quiet Platform, it's called. It's a silly name for a logistics business. In the current quarter, American Eagle expects sales to be up by mid-single-digit percentages, which is in line with estimates of up 5%. So pretty decent guidance here. For the full year, it expects sales to be up 2 to 4%. Again, not bad. The higher end of which would beat the 2.9% analysts had expected. So I think it's that guidance of 2 to 4% upside is probably what's driving the move in the stock this morning. During the COVID pandemic, American Eagle spent hundreds of millions of dollars acquiring a number of shipping and distribution companies that eventually became Quiet Platforms, the retailer's internal logistics branch. It was designed to streamline American Eagle's own shipping needs, but the company also sought to Uberize the global supply chain by serving as a logistics platform for other companies. So yeah, an apparel brand decides they want to be a trucking company and they want to Uberize the global supply chain. And in a shocking turn of events, that ended up being a bad business decision. Go figure. Last spring, American Eagle acknowledged that Quiet Platforms wasn't performing as it had expected. The segment's president and chief operating officer had left the company as the retailer worked to restructure the business. During the fourth quarter, American Eagle took a $98.3 million impairment and restructuring charge related to Quiet Platforms, the bulk of which were impairments to its goodwill, intangible assets, and technology that are no longer part of the platform's long-term strategy. Employee severance costs made up $4.3 million in the charges. So despite that boneheaded move to become a logistics company, American Eagle stock is actually doing pretty well ahead of the open, up 13.7%. Apparently, the market really liked that forward guidance of mid-single-digit increases in sales, especially while the competition like Hugo Boss and Victoria's Secret are all guiding in the opposite direction. So American Eagle Outfitters are doing okay this morning. In other news, a ship evacuated after the first civilian fatalities in the Houthis' Red Sea attacks. Unfortunately, it's a miracle nobody had been killed up until this point. It couldn't go on forever. And unfortunately, yesterday we had the first fatalities in these terrorist attacks against boats. India's Navy evacuated all 20 crew from a stricken vessel in the Red Sea on Thursday after a Houthi attack killed 3 seafarers in the first civilian fatalities from the Yemeni group's campaign against the key shipping route. The Iran-aligned militants fired a missile at the Barbados-flagged, Greek-operated True Confidence on Wednesday, about 50 nautical miles off the port of Aden, setting it ablaze. In a statement, the owners and managers said all 20 crew and 3 armed guards on board were taken to the hospital in Djibouti and the Horn of Africa by an Indian warship. 2 of the dead were Filipino nationals, while the third was Vietnamese. And the owners and managers said, expressing condolences to the families. 2 other Filipinos were also severely injured. Look, guys, we had a tanker was sunk a few days ago. Now we've got fatalities on this boat. Despite the counterattacks, despite the Navy's efforts in the Red Sea, Operation Prosperity Guardian has not been able to guarantee safe navigation through the Red Sea. That much is becoming clear. I don't know what this means. Does this mean the naval engagements are going to escalate? Does this mean the status quo continues? People just keep getting shot at? I don't know. But this made a deadly turn yesterday, unfortunately. And in the last one of the day, ex-Google engineer charged with AI tech theft for Chinese firms. The U.S. DOJ charges a Chinese national with stealing trade secrets. Lin Wei Ding didn't tell Google of his China connections. A Chinese software engineer working for Alphabet's Google was charged by the U.S. Justice Department with stealing trade secrets for developing artificial intelligence from the company's supercomputing data centers. Lin Wei Ding, 38, a Chinese national and resident of North California who was hired by Google in 2019, has been charged with 4 counts of trade secrets theft, the Justice Department said in a statement on Wednesday. We allege the defendant stole artificial intelligence-related trade secrets from Google while secretly working for 2 companies based in China. That's according to Attorney General Merrick Garland in a statement. We will fiercely protect sensitive technology developed in America from falling into the hands of those who should not have them. A Google spokesman said Ding acted alone and that the company was able to act quickly and refer the case to law enforcement after discovering the problem. I really doubt this guy was acting alone, to be honest with you. But at the same time, have you guys seen the kind of BS AI products that Google has been putting out? Gemini is a joke. I mean, if the Chinese are going to steal AI technology, that's the one you want them to steal, to be honest with you, because Google can't get out of its own way when it comes to artificial intelligence. They're shooting themselves in the foot. Gemini is a joke. You can tell it was written by very intelligent imbeciles who prioritize their stupid identity politics ahead of actually creating a product that actually adds any value to anyone anywhere. See also the ethnically ambiguous historical figures that Gemini has produced. And I just want to say thank you very much to Mr. Charles Coughlin, who says, because I couldn't think of anything better to do with my Pepe coin gains after I paid off the MasterCard. Well, Charles, thank you very much. Congratulations on your Pepe coin games. Look, guys, we've been here before. Bitcoin runs. We're in a new halving cycle. The Bitcoin goes up and it drags all the shit coins with it. Congratulations, Charles, on your Pepe coin gains. I'm assuming that's sarcasm. Just be careful in shit coins, guys. Most of these things are jokes. They're run by pump and dumpers and scam artists. Can you make money in them riding the FOMO wave in Bitcoin? Yes, but you can also get wiped out. Me personally, I never touch this stuff. I like my Bitcoin. That's all. That's the only place I go. But, Shiba Inu, Doge, all the joke coins are riding this FOMO wave too. So there are gains to be had there. Again, it's not for me. But congratulations, Charles. And also congratulations on paying off that MasterCard. If you're going to make gains, get out of debt, guys. Get out of debt. Better yet, if you're in debt, don't buy shit coins to begin with. Again, I think, not picking on you, Charles, here. I'm picking up a little bit of sarcasm here. My sarcasm detector is functioning, maybe a little bit out of cal this morning, though. But thank you, sir, for the support of the channel. I appreciate that very much. And what's going on with the Brojo show? Gen X the BS. He says, where's the $100 silver I've been promised? You and me both. You know what? I don't care if it hasn't hit 100 yet. Brojo, I got my shiny right here. I will just keep nibbling as I oft do. Little nibbles here and there. Same thing I do with gold. Same thing I do with Bitcoin. A little bit at a time. Just chip away. Forget what the price is doing. We know where the price is going in the long term. And so, you know what? If silver wants to take another 2 years, another 3 years, heck, another 10 years to get to $100, I will gladly wait and accumulate more while that happens. Silver has really sat out this rip-roaring rally in gold. We've got gold at an all-time high. Silver nowhere near an all-time high. That gold to silver ratio is rising. I believe it's pushing 90 right now. It was high 80s last I looked, but gold is up again this morning. So I think we're probably pushing about 90 in the gold to silver ratio. That is historically high. So either gold's going to come back down to earth or silver's going to start playing catch up. In cases where we've got industrial slowdowns, I think silver's use as an industrial metal may be holding it back a little bit here. Silver's only about 50-50 monetary/industrial metal, whereas gold is almost exclusively a monetary metal. So that might be holding silver back at the moment, but that also means if the industrial base ever recovers, the price of silver will rocket along with it. So I like both. I just nibble a little bit. So yeah, I'm in no hurry to get to $100 because I get to continue accumulating. Thank you, Brojo. I appreciate the super chat and support of the channel. Thank you, Mr. Cole Marsh. He says, more coffee, more wake-up juice, FTW. Thank you very much, Cole. I appreciate that. Cheers, mate. I appreciate the wake-up juice this morning and the support of the channel. And the Dad Dan gifts, how many? 50 Nobody Special Finance channel memberships. Thank you, the Dad Dan. The DD, appreciate that very much. If you guys are the recipient of one of those new channel memberships, be sure and send a thank you to the Dad Dan. That was very generous of you. And welcome to all you new melon heads. And Vegas Schmitty says, help out Vicky's secret and get that someone special some panties. Yep. Do it for the economy, folks. That's right. Go shop for something naughty. The fate of the country may very well depend on it. And by the way, while we're on that subject of Victoria's Secret sales are down, I am seeing a lot of articles about birth rates falling, about the population declining. In the States, I'm seeing teachers getting laid off because school enrollment is down. I think a little bit of that is homeschooling, but we also have the fact that we are just not making babies. And lo and behold, Victoria's Secret posts a lousy quarter. These things are correlated, folks. So the fate of humanity depends on it. Go shop in Victoria's Secret. Get that Barry White album. For my German friends, David Hasselhoff's greatest hits. Call out the big guns, the artillery. We need to repopulate this planet, guys. If we don't start making babies, we are going to have big problems. There will be labor shortages. There will be excess houses. The real estate market would crash. It will cause havoc years from now. And this is not a China problem. This is not a Japan problem, a U.S. problem. This is a 3/4 of the planet problem. The whole northern hemisphere, the population is collapsing. It's because of economics, guys. It's because it's too expensive to have a family, to raise kids. And, speaking of my millennials and Gen Zers, talk about a generation that could really use it. You guys are kind of uptight, man. And I'm justifiably so. I'm not saying you're not justified in your anger, but hey, give it a shot, guys. I'm just throwing them out there, Let's all get together and add to the population, shall we? Thank you, Vegas Schmitty, for taking this channel in a weird direction this morning, brother. Appreciate the super chat and the support of the channel. And thank you, everybody, for having your coffee with the Melon Heads. I hope you guys have an awesome day today. Thank you to all my Patreon supporters and channel members. Links down below to all that good stuff should you feel so inclined. Hi, Mom. Hi, Dad. I love you guys. And everybody, till next time, live small and dream big.